How to trade options on Robinhood, step by step. Have you ever heard about people making huge gains trading options but felt completely lost when you opened Robinhood's options tab? Don't worry, you're about to learn exactly how to trade options step by step, from beginner to confident trader. Part 1. What are options? Before we trade, let's quickly understand what options are. An option is a contract that gives you the right, but not the obligation, to buy or sell a stock at a specific price, on or before a specific date. Calls give you the right to buy. Puts give you the right to sell. Options are powerful because they let you control 100 shares of stock with a relatively small amount of money. But that leverage also means higher risk, so understanding the process is crucial. Part 2. Accessing the options chain on Robinhood. Let's jump into Robinhood. First, search for the stock you want to trade. For this example, let's use Apple. Tap Trade and then Trade Options. You'll see expiration dates at the top of the screen. This shows when your contract ends. Choosing a longer expiration gives your trade more time but costs more. Shorter expirations are cheaper but riskier. Part 3. Understanding calls and puts. On the left side, you'll see calls, and on the right side, puts. If you think the stock will go up, you might buy a call. If you think it'll go down, you might buy a put. Each side lists different strike prices. These represent the stock price at which you'd buy, calls, or sell, puts, if you exercise the contract. Part 4. Strike prices and moneyness. Strike prices are the backbone of options trading. For calls, if the strike is below the current stock price, it's called in the money. If it's above, it's out of the money. For puts, it's the opposite. Robinhood highlights in-the-money options differently so you can spot them quickly. ITM contracts cost more because they already have value, while OTM contracts are cheaper but riskier. Part 5. Key numbers. You must know to the right of each contract, you'll see numbers like bid and ask, the prices buyers and sellers are offering. Last price, the most recent trade. Volume, contracts traded today. Open interest, total contracts still active. Look for tight bid-ask spreads and high volume. That means liquidity, making it easier to enter and exit trades at a fair price. Part 6. Buying your first contract. Let's say Apple is trading at $150 and you believe it will rise. You choose a call option with a $155 strike expiring in 1 month. Tap the contract, hit buy, then select one contract. Remember, each contract represents 100 shares. Robinhood will show you the premium cost. If it's $2, that means $200 total, since it's 100 shares times $2. Submit the order, and if it fills, congratulations. You just bought your first option. Part 7. Monitoring and managing the trade. Once purchased, you'll see your option in the portfolio. Robinhood tracks the current value, showing gains or losses in real time. You can close the position by selling the contract back before expiration. Important, you don't have to hold until expiration. Many traders buy and sell options like regular stocks, profiting from price changes without ever exercising the contract. Part 8. Selling to close versus exercising. At expiration, if your option is in the money, you can exercise it and buy or sell the shares at the strike price. But most traders simply sell to close their contract early to lock in profits or cut losses. Exercising requires bigger capital because you'd actually need to buy or sell 100 shares. Selling the contract keeps it simpler and is the most common approach. Part 9. Advanced tools to watch. As you progress, you'll encounter concepts like implied volatility, which shows expected stock movement, and the Greeks like delta, theta, and vega that measure sensitivity to price, time, and volatility. Don't worry if these sound intimidating now. Mastering the basics first is more important before diving into advanced strategies. If this video helped, tap that like button, subscribe for more trading breakdowns, and drop your questions in the comments. Your next step toward confident trading begins now.